Hey guys, welcome back to our channel. Hope you have a wonderful day. In today's video, we're going to talk about Q&As based on personal finance. Our, intake, what would we do? Our 2 cents.
Yep.
And it's kind of interesting because it's got to do with personal finance, money, and anything related when it comes to
Fire.
Money and fire.
So in the channel, normally we talk about saving, budgeting, side hustle that we're trying to achieve fire. We are to what can I explain? We're close to 40 and then we have 2 young kids and we're trying to achieve fire. Slowly journey.
Yep.
So the first question that we got today is, hi, I know post and delete to property investment, but not sure if now it's time to get because now I think now in Australia property is not as hard, the interest rate going up so high. I think whole wide world is like that.
I think like nearly a year.
10 consecutive month that we've been going up for interest rate. So it was 0.5% and now it's like 3.5, something like that.
So
I lost track.
over the whole entire, let's call it a year, every first Tuesday of the month, the bank, the
RBA announced the cash rate. It's based on unemployment rate, based on inflation, how much people are spending. Seems like no matter how high the interest rate, people still love to spend. Yeah, that's why they keep on going up the interest rate.
Yeah. So based on that, it's like, is this a good idea to buy
property? So that's the question.
Yep.
So this person, the age is 25 years old, saving with $15,000, got shares in for $85,000. Salary is $100,000 per year, no debt. So his question, should I sell my shares and put down $100,000 deposit on an investment property, or continue to slowly invest in the Australian stock exchange until interest rate decline? Any advice should be greatly appreciated.
You want to go answer the question first, or should I?
My answer, no.
So my answer would be a little bit different. So if I went back to 25, and should I buy investment property first, based on $100,000 deposit? No, I wouldn't do it.
No? Well, what was slightly different? Still, the answer is no.
Yeah, the answer is no. I wouldn't buy investment property purely because I've seen what we've gone through so far.
Because that's what we've done. When I wasn't at 25. I was still at 20s. I was at 20s. I did have share. It made money. I sold the shares, and because that was my strategy at that time, I didn't know anything.
Any difference?
And everyone is talking about property. So many. The top millionaires or the richest people in Australia, they generate their wealth through properties. So I thought, okay, that's the way to generate your wealth.
Yep.
And then I use share because they grow faster, higher return, higher risk.
That was individual share?
Yes, I was doing in individual shares. I think this person too, because he's a Australian stock exchange. So
if I know with all of the information, actually keep on going.
Yeah. So, and then that's what I've done at that time. I bought some shares, accumulated a deposit and some savings, sold all the shares. The thing is that if I didn't sell the share, I don't want to look back. Anyway, so I bought the share, I sold the share, and then bought my first investment property.
And taking a loan at the same time.
Yes, and taking a loan at the same time.
Get a mortgage, whether it's 10, 20, 30%, whatever it is.
I paid 10% at that time only. My deposit was 10 only, I think, yes.
Okay, and then? And
then, hard to find tenant, property manager wasn't doing the job that I expected him to do. Anyway, because it's not the manager's money. I totally understand now. It's not their mortgage.
Correct.
Why do they work so hard?
1
week later, it's okay. They're missing out like what, $50 for management fee.
Yeah.
But as an investor, you're missing the whole week. You have to fork out the
mortgage
to pay the bank, no matter you have tenants or not, no matter your property manager doing the right job or not, you still have to pay the bank. So now we went through both. That was the path we started, and then no, I wouldn't do it.
So the simple answer is no, but that's your reasoning.
Because we went through is the hassle of you gotta go inspection, you gotta find it, it's big chunk of money, you rent it out to someone, they're not looking after your property. The tenants don't care. The agent don't care. Who
Not
cares?
as
You
much.
care.
Yeah.
You care the most.
Yeah, even though I learned sometimes you'll be beat up because like, hang on a second, you damage my property. Yeah, I have to pay the mortgage.
You have to pay insurance, the
and
premium.
I have to fix it.
Yes.
Fix the property as well.
The time, you lose out your money, you lose out your rent.
Like property investment, I reckon it's pretty cool if it's prepaid. If you're gonna buy it all in cash.
Yeah.
Now we did the whole lot. That we did the buying it at a very low deposit of 5%. Back a long time ago, we put 20%.
Yeah.
We also have. Throughout our journey, we also have a property that is now outright in cash. Like there's no debt
in there.
And so far we had a great tenant. And out of all of those things, like your emotion will go through like up and down.
Yeah.
And depending where you are in life, okay. At the moment you're looking at maybe 25, you're still single, no kids, no dependents. And you're probably still
not
living
as
at
stressful.
home. Life is not as stressful. And then when you go through this, let's say fast forward 10 years from now, which is where we're at, you know, we're in our 30s, well, late 30s now. We have two dependent, we have two kids, we have multiple different properties, and then the amount of
the bills,
the amount of money that is
bills.
coming, just the admin costs on a property, the ins and out of the property, it's quite a huge lump sum.
Yeah.
So, yeah, like if I were to go back again, I'll probably try not to buy the property first.
Yeah.
Coming from experience now.
If I can restart everything again, I wouldn't buy property. I'll just buy the place that you're going to live in. Somewhere that you like, principal place of residency. You stay there, forever home. Kids move out, downgrade, and that's one of the channel people use to accumulate wealth, because you know the place you live in, you look after it, you renovate it, you do anything to make it better, because you are the one who living, you paying the bill.
I mean, I must admit, there's some, there's a lot of, I guess, information out there that's looking at it and go, hey, property is a great return. You know, you can just do renovation, small renovation, and then you can, jack up the value by, a couple of $100,000 or so. But at the same time, the risk in there as well. So not only the risk of, I guess, you're borrowing, leveraging, using a mortgage, and then what if it's the other way around? You did all the renovation, you went over budget, and then there's going to be stress.
You couldn't
involved.
sell. You have to sell it at a loss.
Exactly.
Yeah.
Well,
one of our friend, he has like multiple property. So then they rent. So they have all these investment properties, but then they don't want to stay in the place they were living, and then they rent to an apartment, right? And now interest rate going up and everything, so no, they can't rent anymore. So sometimes investment property, it sounds really good, but it just gives you financial stress.
I think, I guess in some aspect of it, great that you're looking at that as it might be a vehicle, but there's actually other alternatives that is somewhat simplified.
I think everyone's strategy is different. So it's nothing wrong with that strategy, and we did try it too, because that's what that's the loudest voice I've heard about property.
Use leverage, with $100,000, let's say if you put $25,000 per property, so you can get 4 property as an example. Yeah. $25,000 per deposit, I think, a sample, So you effectively can control 4 properties.
Correct, but can you manage it? Can you sustain it? Can you keep on the same lifestyle you're having? If one of the properties empty, the other property is damaged, can you still sleep, or do you have to take a second job to pay for it? Is it you looking for lifestyle, or you looking for be frugal, be very tight, and pay for the mortgage for someone else to live in?
So we went through the good and bad and the ugly, I guess, in terms of the property. I mean, right now, at the time this is being recorded, our prepaid home, because our lifestyle is somewhat a little bit changing, we're thinking of selling it. We're going to liquidate that. Now, if that was like in a share or ETF or some sort of portfolio, you could just click on a button.
Yes. Oh, yes. Selling property. Wow. So we just in a week. So we did cleaning, agent just do it, 1,000. And then did the toilet fixing, 6,000 did it. And other roof fixing, 1,000. So like pretty much 10,000 gone before
Correct.
it's sold. And I don't know if we can recoup all this fee after like the sale price. I don't think so. We're just trying to make it a bit more presentable to get it sold. It's not that bad, but I don't know. It is just trying to get more people to have the interest to go in, to bargain or to submit a price.
So for us, it's like, okay, then there's a little bit of investing as well. So in the beginning, we bought this and we're expecting a forever home.
Forever investment?
Forever
no,
investment.
I did think of, what if when we retire, we can move in there because we don't have kids anymore. We can live anywhere.
Yeah.
That was in my head. I did mention when we retire, we'll move in there. We can because the kids don't have to be with us. We're not moving into that investment property because the school area, the catchment is not as good for the kids, and our kids are still too young. And that's the main concern. That's why we sell it and we're trying to get more cash and buy another property where we want to live.
At the same time, we don't want to get a mortgage. So figured, then we liquidate that property. We liquidate another property to buy a prepaid home. So it's just that having a leverage on property, it's good if you understand all of the risk involved. We've been, I guess, in the bad side of property where I couldn't sleep. I was financially stressed.
It's not only us. We have some friends, they also have few properties and they're like, it's just stressful. Eventually they just sell all. Why not put the money in somewhere? For example, put it in like shares, ETF, or whatever you understand. And some people put it in super. Why not?
So, like if it was to start again, I would rather have a multiple pool, maybe a couple of shares of that have that property portfolio.
Yes, that company that buy properties.
Correct.
Maybe you don't, because it's still the same. You're buying one property, you put all your money just in one basket. That's risky. Yes, you may have a high reward, but still it's rely on if you got a good tenant, you got a good agent.
And then, for example, our real estate agent alone, we had to kick out from one real estate agent to another agent because they don't do their good job.
They're not doing the job they're supposed to do. So we've been very nice already. Whatever they ask to fix it. But then apparently the tenant's been asking the agent for all this maintenance. We never receive.
Correct.
Anything.
So, and then if you're interstate as well, because maybe the interstate is a lot more cheaper than where you are. So it might consider you have to, I guess, weigh off the options of one of these days you probably want to go there and have a look at the property because after all that is your investment.
That's you put in $100,000 in there.
So was it a mistake
for someone
for us visiting in that property or not?
Not really. Why?
No, is it like beforehand you didn't want to go to
I didn't want to go because I don't want to be emotional attached. It's investment only. Someone living there, I'm grateful. Someone paying for my mortgage.
But for me, on the other hand, it's like, hey, we already put hundreds of thousands of dollars on this property. I really want to step in and have a look at it at least. Because after all, it's like, hey, you put lots of money in there. You might want to see what you're actually purchasing. So, not on based on emotional attachment. It's just like, hey, somewhat the scenario, what it looked like in the neighborhood.
What after you've seen the property, then what do you feel?
I feel like there's a lot of improvement that needs to be made. So, for example, painting the inside or something and changing the carpet.
Well, but the thing is, if you didn't go there, you don't think of it, you wouldn't have that spend.
Yeah, that's correct. But at the same time, if you don't do any of those, you're probably going to minimize your rental income potential, for example.
But then on the other hand, it's rental only. They're not going to look after it.
Yeah, they're not going to look after it. I know that. I know like every 4 or 5 years on an average rental income, rental property, you kind of need to fix something. Whether it's repaint the whole entire inside or change the carpet because they damaged it because they have a pet previously and whatnot. You kind of want to know what is the wear and tear or expected the wear and tear when they move out. So that way you can fix it before the new tenant come in, or if not, fix it because they've been saying bits and pieces
too old.
So that's the other thing.
I wish I can be a tenant. The carpet too old. Can you change it and you don't have to pay? Same rent. Isn't that good?
Maybe you end up jacking it up for about
$5 a week,
$10,
and it will take you 3 years to get your capital back.
And then I guess most of this journey or most of this question occur because you hear it from like, oh, somebody
People
bought
make
the
so
property,
much money.
you know,
A
paid
lot of
off.
ad telling you to buy properties too. A lot.
And then you're looking at the numbers, it's like, hey, they buy it for this amount, and then after a short period of time, they made a profit of X, Y, Z amount.
I'm sure there are many people making money, but maybe we're just pure unlucky for us. I don't know. It just doesn't add up for us.
We always look at the numbers. Like, how much money did you actually give back to the bank? And let's assume, okay, I'll give you an example. Would be, let's say you buy the property at $200,000, and then, you know, let's say 1 year later, it, you know, in the suburb, in the area, it becomes $250,000. And you think to yourself, it's like, hey, I made $50,000. But you haven't taken care of the account of
stamp
the
duty
admin costs, the
legal fee when you first entry.
Yeah, and then the real estate agent fee, and then after that, the mortgage repayment every week or every month in that aspect. How much have you been paying to the bank? We did a lot of numbers on this, and then decided, guys, you're not actually making any money when you sell the property because that's just a forced saving.
Yeah.
So just because, you know, you see you buy at low and then you sell at high, if you have a mortgage on that, it's get chewed up by all of the repayment and administration costs.
In summary, you're just making everyone rich except yourself. That's how I see it. Why people are talking so much about property? Well, who make money? The bank, the first.
Yep.
The agent.
Yep.
The pest control, solicitor, pest control, and all those stuff.
The government,
insurance, the government. You pay stamp duty. Why people not talking about other like share or ETF? No one's making much money. It's only the company, the broker.
Yeah.
Or government makes some money too from capital gain tax. Yeah. That's it. Not much. So that's why they're not really seeing.
And I found it like now having to experience both. Having the ETF and all of this little platform that we use, and thinking to myself, yes, it's less hassle,
and then you can put small amount of money in there. You don't have to worry. You can see, but the worst bit is you can see every day. It's like a roller coaster. Can you do it well? I don't know. You have to. Yeah, same thing.
It's the same thing. Like everything's got risk and reward, you say, So depending on your risk tolerance, but at the same time, you would not know unless you try.
Yeah, we tried.
We tried.
Not for us.
Not for us. So that's just our 2 cents, guys, based on I guess what would
the question do? If we're back in 25, we have the money. If would we sell the share, buy property? No, I'll keep the share, just let it grow, or maybe you can diversify in ETF or some other sort.
Yeah, but not buying the investment property using leverage.
Yeah, I don't know, but the thing is, when you buy property, you can brag about it. I bought this property, it's mine.
Mind you,
but I work for the bank.
It is not your property until the whole entire mortgage is paid for.
You don't. Once you got a deed, then it's yours. Even the deed, they don't send it to you now. Apparently, it's online.
So if you like this type of content, guys, don't forget to subscribe, comment, and
see you next time.
Bye.
Bye. Wow.